In this video, we're going to talk about Fibonacci retracements. Now, most of you have probably used one in the past, especially if you've been around for at least a week or a month. But for anyone who's new, and for those who are a little bit more experienced, we're going to go through some do's and don'ts, and then I will show off nearer the end a improved way of doing it that's just a little bit different to the majority. So we're going to start off with how do you draw a Fibonacci retracement. Now, the most common way of doing so is by drawing from a peak, which I'm going to grab this one here, to a trough. So you go from the maximal point to the minimal point, and from that you'll be able to get all of your values up on one side, and then if you're in an uptrend you would normally tend to draw from the bottom to the top. Your most common points of reversal are your 382, your 0.5 and your 618. You'll find that these are the ones which will tend towards using the most. The 618 in particular is the strongest. The way you would look at it is you wait for price to come up towards that value, and you have to sit and watch, and especially drop down to a low time frame, and then you can watch for price to hit an inflection point where you'll get a nice turnaround and probably consolidation beforehand before it then moves off. In this case, you can see that as we got into this 0.5 to 618 range, that it consolidated before eventually moving off, and in this case it continued going back up towards what we'd marked as on 0.1. But in some cases you could have found that it could have found its rejection and moved downwards from this 0.6 range. In general, you will find this is the strongest way. Now, some caveats in drawing them. I'm just going to remove everything from the chart quickly. We always tend to draw it from the last point before it drops off massively. So for instance, in the case of this upward swing here, I would draw it from this candle and up to wherever price ends up ending, because the amount that this has pulled back by is greater than 50% of the initial push. So this is pushed up from this lowest point up to here. It's pulled back more than 50%. In fact, it's probably around 80% of the move. In fact, we can measure that quickly. You can see that it pulled back about 70-75%. So we can see that that's too much, and then we would move this onto this as our new lowest point, and that's where we'd grab our trend from. And again, if we're looking at this one, we would then be very much grabbing it. This one doesn't quite get to 50, so we can grab it from this tip to this bottom point, and that's how we would draw it. And the same if we look back, I would be drawing from this tip to this bottom point, and if I look back again, I would draw from this tip to this bottom point. However, I would be unlikely to ever consider drawing it from here to here, just due to the nature of the size of this pullback, as it is rather significant. So you always try and draw it off the least significant pullback. Now, this is like the most conventional way of drawing it. However, the alternative, which is interesting and I find statistically more accurate, is to draw it off of your round numbers. So in this case, I'm on AudioSD, so the bottom price I've given it right now is 0.6, and I'd be drawing it to 0.7. And then if I needed more, so for instance, as it comes to breaking 0.7, which is a large psychological barrier, I would then draw from 0.7 to 0.8, and if it continued, then I would draw from maybe 0.8 to 0.9, although that's going to take a significant amount of time, as this is a daily chart. But you can see that price comes into and heavily uses these levels. As you've noticed, it did stop out of what looked like thin air. However, in reality, it was stopping on R786. And again, here you've got consistent rejection at the 63,820, and again up through the other levels. Now, when I'm drawing it like this, I always draw from bottom to top. I don't reverse the order for when it's a downtrend or an uptrend. It's always bottom to top. And then we'll go on to a couple of other things, and I can talk about a couple of other instruments, and I will talk about the scale that I would use. So for instance, in Euro NZD, I would use the same 0.1. It's still a perfectly large enough range, and I will demonstrate that on the chart. 1 0.6 to 1.7, and you'll see that our whole 0.1 range is more than adequate. Yes, I would need to have drawn the 1.7 to 1.8 for this large amount here, but you can always have multiple layers of it. There's nothing wrong with that. Things like BTC, you would need to draw a larger one. With BTC, I would tend to draw in 10,000 ranges. So if I give an example, 10,000 to 20,000. However, when price does get more volatile, you will need to go further. So here is the 10,000 range. But if you're finding that we are going through volatile periods, like when it went from 30,000 to 20,000 in the space of 3 days, you'll find that there is a good reason to go to the 100,000 range, which would be from 0 to 100,000. Which gives you much longer term targets. So you can see I've got to zoom out quite significantly at this point, but during times of peak volatility it will give you the ability to set targets and help predict towards movements like this, where you've had this recent swing up that's come up to this 21,400 and sent a wick but went no further, and it also gives you a nice level to come from. You can see again here price just hit the our special number and then dropped off, and again it's just coming through some wicks onto this line before dropping up, before it will probably drop off or break through. A couple of other interesting prices to look at would be a JPY pair, where they're normally in 3-digit quotes. In this case I would normally go from 10 to 20, so I would go from 130 to 140 or 140 to 150. Should be more than ample amount of price range, especially if you're actually trading on a lower time frame. So for instance, if I draw this on the chart, go 140 to 150, you can see that that does consume a large amount of price action, as we broke in the 20th of June 2022, and it's been perfectly valid all the way until around about now, where you've just sort of dipped under and had a single wick thrown up at 140. But you can see how it behaves as it bounces around nicely between the lines, very accurately getting taps on various lines. And then the only other things to consider would be for things like NAS 100. You would again draw it. I would normally draw it to the 1,000. It's probably the easiest way to do it, especially if you're trading on a somewhat higher time frame. So I'm going to quickly draw it from 11 to 12. So 11,000 to 12,000. You see that it does break out a little bit, but we can obviously have just drawn a smaller one. But when we drop down our time frames, it plays around in there a lot nicer, and it's a much easier value to move between, rather than going in 10,000s like BTC would be, which would be far too wide, as it would probably cover several decades of movement at that point. And then US 30, you can do the same thing again. It might be a little bit tight during some times. However, if you're someone who is scalping it, then 1,000 range is more than enough. So I'm going to draw that quickly. So 33, 1, 2, 3. You can see that we did have this recent spell where it had broken out. However, we've had a reasonable amount of history in here, and you can see how it responds very nice and accurately, bouncing up and between levels. And then anything else, you do have to just kind of consider the volatility if you've got something different. So for instance, oil, which is something I have never actually tried with this method, we can then go and draw it and look at the volatility and understand that, well, in this case 70 to 80 is the right amount of volatility. So we can draw it in increments of 10, and then if I was to pick something completely different, we would again have to go and look how volatile it is, see how much price moves, and this is where I have the tendency to look at crypto, because crypto is much more volatile. We do have to set wider targets, whereas everything else tends to be a bit more sedate, so we can look at the smaller increments for our Fibonacci retracement. And that is how we can draw a much different variant of it, and by doing so get better results. Thank you for watching this video, and I'll see you in the next one.